What is going on, everyone? Welcome to my first stream. My name's Adam. Today, we're going to go over earnings madness. Some of the biggest companies in North America have reported earnings, which has impacted my portfolio greatly. All right, so we're going to go over a portfolio update, earnings, and hopefully there will be some action in the chat. So we'll go over that. And again, this is my first live stream, so excuse me if it's a little off, but we're gonna try this thing. Figure always down to try something new, try to grow the channel and connect to subscribers. Okay, but before we get into it, I just want to say please smash the thumbs up button, as well as subscribe to my channel if you haven't already, and leave me any comments in the comment section. Obviously, there's like a live message thing going on as well, so feel free to do that. And as well, there's a couple links down below. I appreciate everyone who has been joining the Discord. Right now we have 36 offline members, 8 online members. So that tallies up to 44 members so far in the Discord. So I really appreciate that. We talk about a lot of stocks. So one guy called out MUDs and it went absolutely insane. It was like $10 a share, and now MUDs is like, well, let's see, is like $16 a share. So a nice, 60% gain there. Let's just check if the live stream is working. And yeah, it seems like it's already gone for 1 minute and 30 seconds. So yeah, that looks good. And that is good to see. Awesome. Okay. So again, we have had major earnings. We can see on Monday, we had Tesla going on. A lot of other First Bank here. So probably Tesla was the biggest name there. Tuesday, UPS, General Electric, 3M, a huge manufacturing company. Visa, of course, everyone knows Visa. Waste Management, Starbucks, Pinterest. Pinterest actually went down, so we're going to go over all those earnings. AMD, Microsoft, huge names, like trillions of dollars in market cap. And on Wednesday, we have had Boeing, Apple, Facebook and Apple have had really nice earnings. Qualcomm, I'm actually invested in Qualcomm. Teladoc, wow, eBay, again, huge companies. Apple is like the biggest by market cap. Thursday, we have Neo. I'm invested in Neo. Twitter, McDonald's, they would have reported earnings already because it's Thursday. And Friday, ExxonMobil, huge oil company. So you just stacks on stacks of earnings. Okay, so first let's go over Pinterest. All right, so they reported earnings. Their stock dropped by like 14%. It used to be like $77, and now it's $65 a share. I decided to go ahead and buy some on the dip. I just bought 1 share, and that's what I like about Wealthsimple is you can buy 1 share and it's like 0 commission. So Pinterest, they reported earnings in line with expectations, but this was a stock that I think was like priced to perfection. But they have massive upside potential ahead. Okay, so let's look at their Q1 revenue. So it grew 78% year over year to 485 million. This is a company with a market cap of just under $50 billion. Global monthly active users grew 30% year over year to 478 million, and net loss was 22 million, which was actually narrower than expected. So again, they have 478 million people every day, every month to find inspiration to create a life they love. Okay, so again, they were in line with expectation, and I have nothing bad to say about this other than it was in line with earnings, and because it was just in line with earnings, the stock went down because it was technically priced to perfection. But I think this is a pretty good opportunity to just buy more on the dip. Okay, and here we can see their earnings. I always really like Yahoo Finance for this stuff. Were 11 cents compared to 7 cents of estimates. I just think the user growth was slower than expected, and that's why the stock dipped. But again, if you're a long-term investor and you like the growth of Pinterest, I mean, Kathy Wood added more, a huge investor from ARK Invest. She added more to her position. And so because of that, I'm more than confident ever in this stock. Okay, so let's look at the analysis and we can see like the growth factor of the stock, what they're projected to do. And I don't know why this is being incredibly slow. And this is, okay, so again, adjusted earnings per share were 11 cents versus 7 cents forecast. Revenue was 485 million versus 470 million forecast. Monthly active users, again, a little lower than what was forecasted. And average revenue per user was actually higher than forecasted, okay? And again, this is a company that's supposed to grow by 51% in the current year in 2021 and 36% in 2022, okay? So I really like this. When you look at that type of double-digit growth, I think it's reasonable to buy on the dip. And again, their earnings were in line. They were like pretty solid. But again, like since the stock like this is priced to perfection, you have like inflation worries and hedging, this stock just goes down. Next one I want to look at is Spotify. This is actually up 3%, but if we look at it over the past 5 days, a huge steep drop. And I didn't buy a share yet, and I'll explain why, but let's just check on the live stream. It seems like everything is going well, actually. So that's pretty sick. And okay, so let's go back to Spotify. So Spotify up 3% on the day. I think the downward move was, again, not warranted at all. Well, warranted somewhat. Again, this was like in line with expectations, and this is another $50 billion company. I might have been too late in being able to buy this dip because it's already up another 3%. But again, when a stock drops by like 12%, as did Spotify, sometimes you just have to wait, and it's a situation where you can just buy the dip. Okay, so and you're not trying to catch a falling knife as well. So basically what that means is when a stock drops drastically, it might continue to drop as it did here. It was like $267, and then it went down to $256. And who knows if it might actually just continue dipping, and I might be able to buy shares at $250 later on in the day. And Spotify, again, the stock tumbled 10% after the company's first quarter earnings showed signs that user growth was slowing amid heightened competition from big tech rivals. And one that I can name off the bat is Apple Podcasts. So Apple, of course, is getting into the music streaming space. It has Apple Podcasts, of course, and it's directly competing with Spotify. So user growth that's slowing, especially with another stock that was priced to perfection, is, of course, not a good sign. But again, Spotify tends to be a company that keeps up with the times, and since it's focused in the music streaming space and podcast streaming space, it tends to be the number one podcast or device or app that you go to when you want to listen to some music or listen to a podcast. And they actually came out with their new payment podcast plan, where if you don't have a premium membership, you'll have to actually pay to listen to podcasts on Spotify. Okay. However, monthly active users, they still did grow. They grew to 356 million subscribers in the first 3 months of 2021, a 24% rise compared with the same period in 2020. However, it neared the bottom of the company's previously guided range of 354 million to 364 million users. And in a statement, Spotify said that it was modestly below their internal expectations. So this metric also missed Wall Street expectations of a figure of above 360 million based on the FactSet consensus. So growth was better among users paying for Spotify's advertising free service. Spotify added 3 million of these users in the first quarter to hit 158 million premium subscribers, a 21% increase from the same period of 2020. And this slightly beat Wall Street consensus of 157 premium subscribers. What they also did was they increased the subscription fee for Spotify. So this is another good thing if you're looking at bottom line. And they despite this increase in the premium membership, they still added users. So again, another good sign. And I might wait for the stock to settle down, see where the trade ends up being, and potentially add like one share using my Wealthsimple. So again, let's look at the analysis here. We can see they're expected to grow 21% this year and 19% in 2022. So a bit slower than Pinterest, but still for a $50 billion company and with the revenues that they've been having, I definitely like Spotify. Okay. The next one is of course Facebook. I own shares of Facebook, and this is like near their 52-week high. So their 52-week range was from $200 to 331. So again, really close to that 52-week high. But I mean, I will not sell this stock. I own about 7 shares from like 170 US dollars, so I'm up by close to 100%, and they absolutely destroyed estimates. Okay, so look at this: earnings were $3.30 per versus $2.30, just based on analyst expectations. So like a huge beat there by almost a dollar. Revenue was 26.1 billion compared to 23.67 billion expected. So another beat there. Daily active users were 1.8 billion versus 1.89 billion forecast by FactSet. So slightly below expectations there. And then monthly active users were 2.85 billion versus 2.86 billion expected. And average revenue per user, this one always gets me, is $9.27. So every single user that goes on Facebook for the quarter ended here was $9.27. That's ridiculous how much money they're getting off of ad revenue. Of course, with a new Apple deal, their average revenue per user might go down because they won't be able to do any more targeted revenue because Apple is increasing its privacy policies. So again, that might hit their bottom line. However, it's still very impressive that they were able to achieve this kind of growth, okay? And Facebook quarterly average, I mean, you can just see a steady increase in general from 2018 to 2021. So again, revenue of 26 billion for the quarter, that's huge. And Facebook's net income grew 94% to 9.5 billion from the previous quarter. So that's really, really incredible. Again, what you have to know is ad targeting headwinds as a result of regulatory and platform challenges. Most notably, this includes Apple's recent iOS changes that may make it difficult for the company to personalize ads for iPhone and iPad users. And this iOS 14 change will begin having an impact on Facebook's ad targeting in the second quarter. So again, watch out for that. And I expect if their ad revenue declines or decreases, which is what they're in right now, like the main space that they're in, for the stock to get hit hard. But again, when you look at Facebook, I think it could be a serious challenger in the virtual reality space, in the streaming space. Again, it's copying things like what TikTok is doing and what Apple is doing. So I expect this play to be pretty huge, as not many people are using Facebook anymore, but they're getting more into AI, into again virtual reality, and who knows, they always have something to come up in their product. So let's just check on the live stream again. Sweet, it's still going on, so that's awesome. This is pretty hype. I'm just so excited. This is like awesome for me to be seeing this. So let's now go to Apple. Apple again was a huge beat, but again, there was just like a little bit of a spike in the price, but now it's back down by only just like 0.5%. And again, this is the reason why I think this is because of already a significantly high PE ratio. The PE ratio of Apple right now is 36 for the trailing 12 months. They again absolutely smashed analyst expectations for the quarter. And again, I'm an Apple shareholder, so this is good for me. They also they have a plan for share buybacks, which we'll go over. But again, so Apple reports another blowout quarter with sales up 54%, authorizes 90 billion in share buybacks. So that's really good news. As soon as you take more shares out of the market, that means there's less shares to trade. So it takes a lot less for buying pressure to increase the stock price. So Apple reported double-digit growth in every single one of its product categories, and its most important product line, the iPhone, was up 65.5% from last year. Its Mac and iPad sales did better, with computers up 70% and iPad sales growing nearly 79% on an annual basis. That's just ridiculous. I mean, I'm streaming from an iMac right here. I have an iPhone. I generally wasn't an iMac user or even a MacBook Pro user, but their products are just so easy to use that it's just incredible. So earnings per share were $1.40 versus 99 cents estimated. Revenue 90 billion versus 77 estimated, which is up 53.7% year over year. That's just absolutely ridiculous, and I think they'll continue to dominate the space. And long term, we may have to worry about revenue slowing, but this is just not the time for Apple. Apple is just absolutely dominating the space. Again, they're getting into the podcast space, they're getting into so many spaces that I just see them being an absolute beast for years to come. They might even challenge on the virtual reality space, of which Facebook is, of course, the dominant player right now. iPhone revenue was 47.9 billion versus 41.4 billion expected, up 65.5 year over year. Services revenue were 16.9 billion, which compared to versus 15 billion expected, which is up 26%. Other product revenue was 7.8 billion compared to 7.8 billion estimated, which was up 24% year over year. So absolutely ridiculous. Mac revenue 9 billion compared to 6 billion estimated, which is up 70%. iPad revenue 7 billion versus 5.5 billion expected, up 78.9. And gross margin was 42.5 versus 39.8 expected. So gross margin, basically how much of that revenue can you actually translate into the bottom line, and of course the more revenue you can translate to the bottom line, which is by this figure, it is really good. So wow, this is just insane. I mean, I think maybe the stimulus checks may have a huge impact on this. Everyone's just like spending their stimulus checks. I mean, like even the work from home type of deal. Everyone's working from home. Everyone needs a Mac. Everyone needs a better computer. So they're buying Macs. They're buying iPhones, especially as we transition to a more home-focused type work environment. So that's all I have for earnings. Let me know what you think of this. Again, live stream, pretty cool. 0 concurrent views. That's all right. But now let's go to my portfolio. So here we have just a summary of my main portfolio, where I have 27,000 Canadian in right there, and I just have $400 in cash sitting right there. Okay, so that's my overall portfolio. If you're looking at overall my portfolio here, we can see that we have a total gain of $515, which is only 2%. However, I did sell some positions, which we'll go over here. Halion, my biggest loser, but I expect this thing to be an absolute beast. Okay, right now it's just sitting at a share price of $10.69. And this is a SPAC play that has been absolutely beaten down. It's focused on the electrification of Class 8 heavy-duty trucks. And I think I'll be able to recover my cost basis, but right now, not a really nice loss of 61% or $1,000. NAT, second biggest loser, sitting at 40% decrease here. Again, I'm holding for the long term. I've received about like $200 in dividends from NAT, so I'm not too worried about that. And over time, I think there'll be a lot of more like increased hype in this stock as oil tankers start to do well, and oil is needed more around the world. And this closely correlates with the share price of oil. So as crude increases, Nordic American Tanker also tends to increase. Next, we have Corsair Gaming. This is a gaming play, and I think Wall Street is absolutely missing on this one, because I expect there to be a lot of revenue coming in from gaming, and people are not just going to stop gaming once the pandemic is over. Okay, so again, sitting down at a 17% loss right now, but I expect big things to come. And the PE ratio of Corsair Gaming is actually quite low right now, considering the average on stocks. So again, I think unnecessarily beaten down play right here. Apex Technologies, this is merging with AvePoint, a cloud infrastructure type company for Microsoft. Again, I believe in this stock. Same thing with Solo. This is an EV play, down 37%. I mean, I only invested like close to $500 because it's more of a spec play. These are these quirky three-wheeled cars, and again, I think unnecessarily beaten down, and we'll see how it shakes out. Next two plays, Alibaba and Verizon. I mean, the thing with Alibaba is it's expected due to increased regulatory hurdles from the CCP, or the Chinese Communist Party. This created absolute selling pressure on the stock. However, I do believe in the stock long term, and I am in it for the long term. They also, the CCP, halted the IPOing of Ant Group, which is a subsidiary of Alibaba. And this also took a hit from the stock because Alibaba owns about like 30% of Ant Group. And next thing is Verizon Communications. It's a 5G player. A slow growth, but it's also a massive dividend payout. So again, just holding for the long term. CCIV, this one is merging with Lucid. Again, another SPAC play. I put in $451. Not willing to put any more money in right now. And I made some really nice gains, which we'll look at on this play right here. Next one is PaySafe. Huge company. It's been around, another SPAC, but it's been around since 1996. So again, unnecessarily beaten down. And SPACs in general have been beaten down. Right now sitting at $13, which is about 30% above its basically IPO price at $10 per share. I just believe in this company long term. And it's the number one leader in iGaming. And yeah, so whenever you do a transaction and you're betting on sports or you're doing an iGaming type thing, you're probably going through PaySafe. It's the global leader in that industry. Next thing is Dropbox. Again, really like Dropbox. I think unnecessarily beaten down, but still sitting at a healthy 29%. I put in $800 there. Walgreens, a nice dividend payer, as well as, again, I think unnecessarily beaten down. Also, I think this company will be a winner considering the vaccine rollout, and a lot of Walgreens stores are administrating and distributing the vaccine. So if you create more foot traffic in the stores, I think revenue should profit. So more of like a long-term swing play as vaccines start to get rolled out. I think this will be relevant in, of course, their bottom line. So right now sitting at 31% increase right there. Berkshire Hathaway, I don't think I'm ever going to sell this. Right now sitting at a 37% increase. Of course, it's Warren Buffett's conglomerate company. I just really like the stock. It's basically like holding an S&P 500 ETF, but on steroids. Okay, work. This is Slack Technologies. Actually, Salesforce recently announced an acquisition of Slack Technologies, and I think I'll just continue to hold work. And again, sitting at 63% gain right here, up $663. Again, not interested in really selling this stock anytime soon. And lastly, Facebook with a stellar quarter, up over $1,000 US. Again, I'm just going to be sitting on this for a long time. My price target would probably be like $370 or something like that. So that's my US investments. And let's see, here we have my Canadian investments. This is a recent holding right here, G-Tech company. They actually posted their quarterly results, which I think were pretty good, up 7% here. And this is an MJ play. So is Planet 13, another MJ play, up almost 100% here at 632 Canadian dollars. And I'm down on Kirkland Lake 32%, but I think, again, this is an over-exaggeration, and I've been adding on my Wealthsimple account, which we'll look at later. So up in total $180 here. But let's look at my buys and sells. I think I captured it. Where did I capture it? Actually, no, it's right here. Okay, so let's look here. And Walgreens, dividend of $15. Kirkland Lake, dividend of $10. Churchill Capital. So this one, I absolutely did a really nice swing trade. I bought like at 18, I sold at like 56, and again, we know that I bought back when it was like around $21. So I made $1,000 just off of that trade. It was like over a 200% increase, and I actually sold Tesla when it was $800. I just think it's like way overpriced. And if we look at Tesla stock price right now, it's like 678. So I sold at 800, so I might dip my feet in. We'll see what happens. Let's see. Okay, so one viewer right now. Nice. Pretty interesting how this goes on. Okay, so sweet. I'm just like really fascinated by this stuff. So again, I've made like $2,000, give or take, $1,000 Canadian and $1,000 US just in the year to date. And these are from my TD accounts, and received in total like around $33 in dividends. So pretty nice there. And let's take a look at my Wealthsimple account. Okay, I just have to log in quick. And here I just like buying one or two shares of a company. Okay, and kind of averaging down, because with TD, whenever you buy a stock, you have to pay $10 in commission fee, and I'm not trying to do that. So here I think this is misleading because they actually sold out of my Star Peak Energy stock when I think they're transitioning to the merger that they're doing with, which is STEM, and it's a leader in battery technology and AI. So here down all time 2%. But again, I think it's misleading. I'm down maybe like $20 so far, and I just got into trading in Wealthsimple too. But if you're wanting to do Wealthsimple and you live in Canada, you can definitely find a link below, and you'll get $10 towards your next trade. And with Wealthsimple, again, it's zero commission trading platform, so you can just buy one share of a stock, even if it's like 5 cents a share, and you'll be able to basically average cost downwards or upwards wherever you feel like. So again, we have Apple. I don't think I'll be selling this, especially with their share buyback and with their impressive quarter. I think this will continue, especially as we transition to work from home. I think their laptop sales, iPhone sales will just continue to flourish. Baidu, this is an EV, well, not EV. This is basically the YouTube of China, because of course YouTube is banned in China. Right now, sitting at $213 a share. We can see all time up by 4%, only $9. But again, I'm not interested in selling. This is also getting into the EV space as well as the AI. I think it's unnecessarily beaten down, especially from the Archegos Capital fallout. It went down like 6 months. The highs were $339, and now it's like down 37%. So, give me a break. Like this should not be trading so low. Okay, I get it that there's increased tensions between China and the U.S., but even if it's delisted, it will still be on the over-the-counter markets. Okay, so I just believe in this company long term. I own some Corsair Gaming as well, but here I got it at a more attractive price, so I'm up by $4. I just have one share though. Green Lane Renewable, this is a play on renewable energy. I only own like $9, so it's not even worth talking about. H2O Innovation, I really like this company. I should have bought heavier. I have 55 shares and I'm up by $33 or 32% overall. And it is what it is. You always, like, hindsight is 2020, right? So then there's Hyliion. Of course, I am a big Hyliion bull. Here I'm up actually by $2.91 or by 1%. Of course, in my other portfolio, my TD portfolio, I'm down by like 60%. So this is what I really like about Wealthsimple is you can cost average downwards, and I have 27 shares here. Kirkland Lake, I'm down by 2% here. So again, just cost averaging downwards as much as I can. NIO, a Chinese EV maker, they're supposed to report earnings, I believe, later on today or on Friday. And I like this stock, up by 7%. Pinterest, this was a stock that I actually just bought today. Again, I think like this move here, 78% downwards, and like 14% yesterday based off the earnings, way oversold. Palantir Technologies, this is an AI play, and a lot of like Wall Street Bets crew is talking about Palantir. Again, up 7% on that. Qualcomm, they had a very impressive quarter. I wonder how much it's up today. It's up by 4%. They beat analyst expectations, so I'm just holding not only for the dividend, but of course share price appreciation. I only have one share, but I got it at a pretty attractive price here. Score Media and Gaming. This one I got it at the absolutely wrong time. I'm down $181 or 40%. And I mean, I need to do something about this. I'll probably just cost average downwards. This is a Canadian company leading in sports betting. Okay, and as sports betting nears legalization in Canada and in some states in the US, I think this will stand to profit. So I'm pretty excited with this company, and I'll just have to cost average downwards. But let's just take a look at this stock right here. So absolutely beaten down over the past even month, was like $36, down by 35% there, and it's still up over the past 6 months by about like 182%. But since its high is $53, it's down 60%. So not very nice if you're into this stock. But I think it definitely was overbought, and I thought it was still an attractive price. But I'll just have to cost average downwards on Score Media and Gaming. Next one is Schrodinger. This is a really nice AI and biotech play. So basically, what it does, it runs simulations um, of chemicals that are basically have all the prerequisites to be uh, a treatment for some sort of disease. So I still fully don't understand it, but I really like the stock. Bill Gates is also heavily invested into this company, and I just like overall holding companies that other famous investors are into. So next one is Star Peak Energy, of course. I think maybe the merger actually happened, so I think it takes around like 3 days to do the transition. But of course, I just own 2 shares right there. And Tattooed Chef, I really like Tattooed Chef. I'll have to cost average downwards here again. I only have 10 shares, but this is an absolute beast of a stock. It's into the vegetarian slash vegan sector, and it's growing like crazy. So imagine Beyond Meat, except highly innovative, smaller company, and again, highly beaten down. Let's just take a look at this stock here, down by 2% today. Over the past month, it hit quite a low. So let's just take a look at this was also a SPAC stock. If you're looking at the max chart right here, it used to trade at just like $10 a share, which was of course the SPAC price. And now it's still up by 70%, but it used to be a $28 stock, and now it's still down 37%. So I'll just continue to add to my shares of Tattooed Chef. Highly innovative, highly growing company that's also just destroying earlies. Next one, last one here is Viacom CBS. This one was the Archegos Capital fallout. So let's just take a look at how steep of a nosedive this stock took. Okay, so so there's this one hedge fund manager who basically was over leveraged, and he was heavily invested into Viacom. Okay, I think this is still a crazy cheap stock price for Viacom. So it was like $100, obviously way overbought, and you can see the fallout here, down 55%, close to 60% on the stock after basically they got a margin call. Credit Suisse had to sell out a lot of the stocks. The dude who had Archegos Capital, the hedge fund there, had to sell out, down by 60%. So I decided it was time to buy the dip. And of course, I have 4 shares, and I'm down by 0.13%. But I do expect this company to be a winner. So of course they own Paramount Plus, which hopefully will be a Disney Plus competitor, a Netflix competitor in the long run. And again, just buying the dip. That's like the key thing that I like doing, is when everyone else is selling, that's when it's time to buy. Unless the company is trash, then of course you don't want to buy something like a Hertz Rentals. I wonder if that stock is actually still around. But anyways, you get the idea. So yeah, that's my Wealthsimple update, and I think I'll transition more to Wealthsimple because I really like their zero commission trading, and I like how easy it is just to get a couple of shares, and if the stock drops more, you just keep on buying. Okay, and that's basically my whole principle of investing in the stock market. Let's just take a look on the live stream. 2 viewers, let's go, fire me up. We actually had 4 viewers at one point. That's actually pretty damn hype. So yeah, leave a chat in the comments if you'd like to know about something. I think I'm almost about to end the live stream. I don't know how long it's been going for. I wonder if Hertz Rentals is actually still a thing, because they filed for bankruptcy. Hertz stock, wow, actually $2.02. Let's just see 1 year. Damn. So yeah, still pretty low, but I mean, it's still doing like, $2.04 for a bankrupt stock. That's impressive to me. But again, yeah, check out the steep drop of like, again, 90%, 95%. So I feel really bad if you bought like at $20 a share. But yeah, definitely feel free to check out any of the links down below. Thank you so much for bearing with me on my first live stream. I definitely hope to do more of these. Stocks that I'm interested in right now, let's just take a look at that. I think I'm going to add more Pinterest. I'll probably add more Score Media and Gaming. So basically any stock that's down. I really like Tattooed Chef as well, so I'll probably add more of those. I still have around like $900 to play with, and I'm definitely just going to continue to adding more. And that's just my mentality, okay? If a stock is down, that's not what you want when you want to sell, okay? A lot of a lot of SPAC stocks. So let's just take a look at skills. Um, a lot of SPAC stocks, like over the past month, uh, past 6 months, they've been absolutely getting shredded. Okay, this looks like a typical head and shoulders pattern. This is one shoulder, that's the head, second shoulder, and now it's back down, and we can see kind of a bump, 42% in just like the span of like 5 days. And but this is a stock that traded at $43. Okay, and a lot of people, when they see their stock down by, you know, 70%, they tend to panic sell, and they're like, like this company is a hoax, like forget about this company, especially on like the Yahoo message boards, which I always find absolutely hilarious. They're like, you have to get out of this stock, this stock is just absolutely trash. And what they don't realize is the cyclical nature of stocks like these, okay? Like, of course, when you're at $43 with not much revenue going for you, and a bunch of short reports come out, yeah, the stock is going to decrease by 70%, and it's still a bargain at like 60% down from its highs. Like it's a good stock. This is an iGaming stock. Same thing happened to CCIV, which you look at the past 6 months. Oh, down 5% today. I'm not really sure. And look, it's down 62% since its highs. Like this was a company that was valued at like close to 200 billion at its peak, and of course, like absolutely dropped like a rock when they found out the terms of the SPAC deal weren't favorable with Lucid, and Lucid is a big EV player. So yeah, you got to be careful when you invest in stocks like these, and you got to be pretty knowledgeable of the overall trends. And right now, SPACs are not doing too good. So Kamath is getting heat on Twitter, and Kamath is known as like Chamath, I don't know how to pronounce it, is like the SPAC king. So you definitely got to be pretty damn careful when investing in these high risk type assets. So yeah, I think that's it for me. I think I'm going to stop the live stream pretty soon. Again, thank you for watching. Make sure to smash the thumbs up button, subscribe if you haven't already, check out the links to the Discord below. Shout out to the Discord group right here. So pretty awesome. I think we talk about SPACs. Again, this guy called out MUDs when it was like $10 a share, and I didn't buy in, but congrats to him, 60% gain right there. So yeah, take care everyone, love you all, make sure to smash the thumbs up button. I'll see you in the next one, and let's stop this stream.